Financial wrap up.
Pending home sales is the first of what I think will be multiple economic indicators. The Fed has done enough. Folks don't like 8% mortgage rates, and they are not signing contracts. A pending contract is not a closed deal.
Let's talk about the government shutdown. It's here. It's here. People are frustrated with the government. Looks like. All right. We are back with Michael Zuber for another Friday financial wrap up. How are you, Michael?
Oh, I'm doing wonderful, man. Both of us caught a little bug over the last couple of weeks, but we're both feeling good. I actually feel like myself, so I'm excited.
I love it. Same here. And I'm ready to rally into October. It's the end of September. This show is for today, September the 29th, 2023. I can't believe September's over. Pretty wild, right? The year's flying by.
Dude, Sunday is Q4. Sunday is Q4. Wild.
Wild, wild. Let's get right into the show. So pending home sales, what did you see this week and what is your take on it?
Yeah, folks, pending home sales is the first of what I think will be multiple economic indicators that show the Fed has done enough. Right? There's a lot of talk about the Fed going higher. There's a lot of talk about this and that. But pending home sales, which is a signed contracts in the month of September, fell 7.1%. Now, for context, expectations were they would drop 1%. Last month, they went up 0.5%. So we talk about variable lags with the Fed. We talk about the Fed being aggressive, sending rates up to 8%. Folks don't like 8% mortgage rates, and they are not signing contracts. And oh, by the way, a pending contract is not a closed deal. So pendings are down 7%, 7.1. What is going to happen with cancellations? Last month, cancellations were over 15%. Folks, we are going under 4 million transactions in the month of September. We're going to set a new low. The current cycle low is 4.02. We are going south of 4 million. It's coming.
It's coming. It's here. It's here. And I feel it. I see it. For sure. Inventory still very tight. It's interesting. Days on market. We're starting to see the shift. We're also going to see a lot of expired listings, I think, this weekend for realtors and even for investors. There could be opportunity there. We always finish on opportunities. So folks, stay to the very end. Let's continue with the show notes, though, and talk about the government shutdown. What is that all about? And how do you think that's affecting like interest rates? And let's talk about the government shutdown. Your thoughts there.
Well, so I think there's a couple of things to point out. First and foremost, let's all just hope it doesn't happen because it's just more stress in the system we simply don't need. But I'm on record with saying, and I'll say it again, I think the government shuts down, and I think there's a chance it's a pretty lengthy one. Right now, the right and the left, the Dems and the Republicans, they don't agree, and they only talk nasty about each other. And I think the only way a deal gets done through the House and the Senate is if they work together. And I don't see any signs that that's out there in the short term. On a practicality standpoint, there's a lot of economic numbers that we simply won't get. For example, next Friday, we should be getting the jobs number for the month of September. If we have a government shutdown, not getting that number. So assuming it happens, and then if you assume it lasts 2 or 3 weeks or more, the Fed will be flying at least partially blind. They will get some numbers like the University of Michigan's consumer sentiment or some of these kind of non-government numbers, but government numbers will not happen if there's a government shutdown. So the Fed will be flying blind and probably forced to pause because they don't have enough data. And again, I think Q4 is going to be nasty. I think it's the downturn that starts. I think a government shutdown just creates another reason to kind of pull back and conserve. So yeah, it's a headwind that I guess we wish we wouldn't have, but seems like a pretty likely one. So
Interesting.
we'll
What
find out on Saturday.
So Saturday's the deadline, basically. So
12:01. Yeah, 12:01 a.m. I
interesting.
guess, or I guess Sunday. Yeah.
Even with the election year, I mean, I think generally people are kind of frustrated, I think, with, and again, this isn't my thoughts, but what I kind of see as an observer, people are frustrated with the government. There's been a
Yeah.
lot of back and forth and such. And you think even with that, they can't come up with a bipartisan, it looks likely? If you did an over under, or if you said percentage wise, what's your thoughts on shutdown? Is it percentage wise likely?
So on the shutdown, oh, for me, it's 98.5%. It's very likely. I've been in that camp for weeks now. I just don't see them getting along. I think the bigger question, I think the more important question is, does it last a month?
That
I would,
much?
I'll take the over.
You think it goes long like that?
Yeah, I mean, I hope it doesn't. I hope I'm wrong. I hope I have to wear my swing and a miss shirt. But dude, that's my call.
Interesting. So let me just follow up question, because I think this is important to unpack. Is there one party? So you've got a two-party system, right? So we got Dems on the left, Republicans on the right. Is there one party that holds a bigger lever here that's trying to position themselves? Is it the Republicans trying to overturn? Now we have a Democratic president. Is there some of that? Is there leverage there? Or is it just purely they just cannot figure it out, or it's just not coming together?
I don't think either party comes out a winner in a government shutdown. Um, yeah, I don't think either party's a winner. I don't
Okay.
think. Yeah.
All right. I would agree with you. I just wondered if there was some insight there. So
Yeah.
interesting.
Yeah.
So I guess we'll have something to talk about next week too,
Yeah. And
whether
maybe
it
the week
shuts down or
after,
doesn't
and the
shut
week
down.
after, and the week after. Yeah.
And folks, stay till the very end, because I've got a really important question and I'm going to ask you. And this was not in the show notes, but at the very end, we're going to talk about, okay, if the government shuts down for a couple of days, a couple of weeks, for a month, what will it do to interest rates? Let's save that to the very end, Michael. Let's
Okay.
continue though. Let's talk about the country, what's going on with employment, and specifically unions and strikes. We've talked about this several weeks ago. What did you see this week?
Um, so the UAW is likely to expand their strikes, right? They're doing this every Friday, I think at noon. So we'll see it later in the day. I think it'll happen. We now have Las Vegas, um, I guess, hotel operators or whatever they are. Their 60,000 members have approved a strike. I I think unions are going to negotiate hard for significant increases, as they should. They have not gotten their fair share the last 40 years. And I suspect that means we are going to see a lot more strikes. And the Writers Guild, I think, just had 100-day strike and just ratified a contract, I believe. So I expect a lot more strikes. I expect significant wage increases in those strikes. And at some level, that will be inflationary. I mean, just realize that, higher wages can eat some margin, but will probably cause prices to increase as well. So that's something I think the Fed is watching.
Interesting. Interesting. And I got to say that you've been talking about this all year, that, equity ownership, shareholders, CEO, C-suite type executives have always gotten theirs for a long time. And now it's time for the working man and woman to get there. So
Totally
I
agree.
couldn't agree
Well
with you
said.
more. I come from a union family. My family's all union background. And definitely the workers need to be taken care of. And it's obviously going to happen this time. Yeah.
I think so. And it again, hopefully people hear me. It's well deserved and should. I'm just telling you that when you play this out, some of the outcome of that will be inflationary. Just matter of fact.
Very interesting. Very interesting. Well, I would say wholeheartedly, I support the union folks, and of course, we're going to keep an eye on this. So, let's continue. Let's talk about new home sales. Very interesting. Existing home sales inventory, new home sales. What did you see this week, and just what are your thoughts as we're going into the fourth quarter?
Yeah, new home sales are a very large part of the market. They're historically 11%. They're now 32%, right?
Wow.
Their biggest competitor to existing home sales, not really there. But you're even hearing from more and more builders that are pulling back. New home sales were down because, again, rates matter. And you're starting to see builders go back to the well like they did in Q4 last year, do more and more rate buy downs. Right. They're doing everything they can not to discount prices. But even, they're having to discount some prices. Like, for example, Lennar, I don't know if it's still going on, but early in the week, I read this. Lennar in Colorado, I think in Colorado, I don't remember what city, but it was in the state of Colorado, at a couple of communities, was offering 4.5% 30-year fixed rate loans on new
Wow.
homes. That's a
Wow.
sign that they want to move inventory. So what you're seeing is builders um, move inventory again. I think they're slowing down, which, again, people don't see this coming. Builders are slowing down. They're going to remove the inventory that's not selling. They're going to stop building. And oh, by the way, dude, small builders are out. Small builders
Yep.
are out. There are some
Yep.
builders I know. I actually spoke with the uneducated economist and followed up with some builders I know. They're like, Michael, we're not going to build. We can't, do the same rate buy downs that the big builders do. We're
Yep.
just not going to build. So, guys, if you play this out over 6 months, there's going to be even less inventory in 6 months because there's, nobody's building. It's wild. It's wild.
Wow. Feels like 1980 something, huh?
Yeah, 81, 82.
Feels like the 80s. Okay. Well, by the way, folks, you can go find Michael's 50-year chart. He
Yeah.
gives it away for free on the website, One Rental at a Time. Also, there's a video on YouTube at One Rental at a Time, the channel that accompanies it. I think if you're interested in history repeating itself right now, it feels like a similar pattern anyway, right?
I mean, it'll have its own variations, but damn, the call has been very accurate so far. Yeah.
Yeah. And you've been talking about this. We've been talking about this for a couple of years, it feels like.
Yeah, at
So,
least 18 months. Yeah.
okay. So let's continue. Let's talk about Redfin CEO. Again, folks, stay with us because at the very end, we're going to tie all this together about opportunity, what's next, and what does this mean to you, the One Rental at a Time community? Tell us about Redfin CEO. What happened this week?
Yeah. So Glenn, the CEO of Redfin, was on CNBC. I happened to catch it live or whenever it aired. And he was trying to put on a good face saying that we are at the bottom. Housing cannot go any lower. Right. And again, let's be clear, he was talking about transactions.
Yep.
And Glenn, dude, I know you hope 4.02 million is the low. You're wrong.
Yeah.
We're going lower.
Yep.
And we might see 3.75, 3.8 million. So we are going lower. September is going to break that 4 million level. There is, to his point, there is a floor, right? Even in 1981, the worst affordability, we still did 2 million homes and we had a lot less homes then. There is some floor. My gut's 3.5. Like it'd be hard to go below 3.5. But Glenn is trying to tell us the low is 4. And I simply disagree.
Wow. Okay. Well, we've got the receipts. You've been talking about this for months that we were going to dip below 4. And even now, I think that's a bold call, 3.75, 3.8. That's a bold call. But you know what? I got to say wholeheartedly, I feel it. Like I see it in my own business. I see it when I'm talking to agents, when I put out a new listing, it's like wildfire, because we're below the median typically for us. Very interesting times. Let's kind of put a bow on this. So obviously opportunity. Also, let's go back to 30-year mortgage because even this is a big deal. So with the government shutdown, if we shut down for a couple of days, a week, or even a month or several weeks, what do you think happens with the 10-year bond? What happens with rates? Does it have a direct impact or just your thoughts on it?
So when you talk about mortgage rates, there's two variables we have to ask ourselves. We have to ask ourselves what's going on with the 10-year, and then B, what is going on with the spread.
Yep.
So that's how you answer questions like this. So if the government shuts down for 5 days or less, it's nothing burger. I think it's noise.
Okay.
We start getting out to 2 or 3 weeks. We start missing economic reports. We start having layoffs or rifts or whatever will happen in around that because there'll be people furloughed and all kinds of stuff. that could be a problem. That could cause Q4 GDP to, go the wrong direction. That could cause rates to come in. It's it could be deflationary, right? People conserve. We go more than a month, like I fear. Now you have people wondering what's going on with the US. Is it credit worthy? I mean, you go longer in a month. So I think the first 2 or 3 weeks could lower rates slightly. I think we go more than a month and dude, all hell could break loose. I mean, rates could go up actually because they're like, who can invest in the US? Why do you want to put capital there? They're a bunch of donkeys or clowns. I mean, you could theorize that could be one of the outcomes. So
Okay.
I don't know. Yeah.
I think again, at least it gives us an idea, something to watch for. But again, if it's a short cycle, you believe in the short term, potentially maybe it just softens just a little bit because of the demand for mortgages
Yeah.
shrinks a little bit. Therefore, mortgage originators, companies basically compress a little bit of margin to try to get action. Is that accurate?
Yeah. Well, I think it's a little more than that. I think that's probably step B. I think step A is people realize that GDP is slowing down, inflation is slowing, so you can see the 10-year come in. I think I think if it's
When you
three
say come
weeks
in, you mean just come
drop
down a little
lower.
bit.
Yeah,
Okay,
so I think
lower.
it's 4.6 today. It goes in at 4.45 or 4.4, 4.43, something like that in the short term, right? Sub 3 weeks, sub a month. I for whatever reason, I think over a month, I hope we don't get there, although it is my call, so it's kind of weird. Um, that could be a month could be a problem, I think. It could
Okay.
be a problem.
So and I love too. You're on record. You think it could go a month, but you don't want that. It's not good for the country. It's not good for the
Correct.
economy. It's not good for the people.
Correct. Correct.
Okay.
Correct.
But based on what you've seen, you think that it could go a month. Okay. So let's get back to the real thing. I think why everybody stayed, if you're still watching or listening, where is the opportunity, Michael? I have a couple of thoughts, but I want to hear from you. What do you think is the opportunity for a one rental at a time investor, for a realtor? Where's the opportunity going into October?
The market's going to slow down even more, which means if you're a buyer or an investor, it is time to only do great deals. I talk all the time about doing good or great. I hope people are hearing me. Good left. Good is on the shelf. We don't know where this ship's going. Great deals only going forward. Motivated sellers. Motivated sellers, man. If you're trying to sell in the winter with 8% mortgages, you are a motivated seller. So look at listings, look at expires, make some phone calls. It will take work, Ty. I'm not trying, and I've never made it sound easy. It always takes work. But trust me when I say the best deals I've ever done in 20, now 4 years, are with motivated sellers. Price, terms, both. I want you to realize if you want to change your financial future, the time is recessions, bear markets, the winter slowdowns. And I'm excited. I know it's scary. I know if you live on transactions, it's scary. But if you change your mindset and realize this is the time to make moves while everybody else is scared, you could come
Yep.
out of this. Like if you get one deal it could change your life. One deal can change your life.
Big
So
time. I love it. I love it. Well, words of wisdom, Michael. Obviously, well researched words. I'm
yeah,
100% with Michael. And I want to say, too, for those of you, realtors, even loan originators, if you're a fix and flip person and that's your main bread and butter, if that's your livelihood, transactionally doing business, I think today is such an opportunity because a lot of people are going to be paralyzed by this slowdown. A lot of people are already checking out because of the time of year, because of the situation that transactions are drying up and they're tougher to get or whatever the case may be. This is the time to double down with doing the work, the activities, and getting after it. And I think on the other side, whether that's the end of the year or even next spring, I think that those that really double down on work over the next 3 to 6 months, those are going to be the clear winners in 2024 that are leading the pack in their markets transactionally, whether it's fix and flip, realtors, et cetera. So any last words, Michael?
no, I would just tell you that real estate investing is never easy. There's lots of ways to make money in real estate, but even more to lose money. Financial engineers are going to lose. The good operators are going to win. People that follow us do the work. And I'm excited for you. It should be fun.
I love it. Folks, for more, for subscribe, if you're listening on YouTube, if you're on Facebook on a native feed, go to Michael's YouTube, subscribe, one rental at a time. If you want to learn more about his course, all the different the recordings and all the different programs he has, go to onerentalatatime.com. Michael, thank you so much. Have a great weekend.
Awesome, buddy.